All right, so if I were to ask you and give you the option, if you could invest $100,000 into any stock, what stock would you choose? What's going on, team? It's Ricky with TechWhat Solutions. I found this guy outside of our HQ. I don't know if you guys know him.
I just needed some pointers.
His name is Tanner Fox. He's obviously really big on all social media platforms. On YouTube, how many do you have?
10.5 million.
Ah, okay, well, almost there. But one of the things that I thought would be pretty interesting is Tanner was actually sent me a message just I would say like a couple weeks ago, where you were just obviously interested in the market. Tanner's obviously someone that does really well, but not only just that, but he's always looking to potentially invest in other areas. Trading is something that takes a lot of time, right? It's a little bit riskier, or a lot more risky. But that being said, it's something that I didn't necessarily feel that was up his alley because, let's be honest, he's Tanner Fox. He has a lot going on already. Just like maybe a lot of you guys. If you're in school, if you have a job, if you just have a busy schedule, trading is probably not something that is in your best interest. But investing is something that can be a little bit more useful, or at least understanding how and when to invest. So I thought that I would make this somewhat interesting video asking Tanner Fox where I should invest $100,000 and giving him 3 different choices on blue chip stock. So make sure that if you guys enjoy this video, drop a thumbs up and consider subscribing if you guys haven't done so already.
I just want to add.
Yeah.
If you follow Ricky on Instagram, you guys will see his daily trades, okay? This guy, he's doing well for himself. When you started trading, would you start trading with $30,000 at once?
No,
you know,
no.
like,
what
was you starting with?
I think it was like $2,500 to $5,000. So much the dollar amount behind the trade. It's like with experience, right? When you were first vlogging, you were obviously filming with much lower quality equipment.
Right.
But now that you have
Built
the confidence and the experience, it goes hand in hand. You can invest the couple $1,000s into quality equipment. Your No Fucks Given podcast. You know, would you have been able to do that when you first started, right?
No, yeah, facts, yeah.
Yeah, 100%. So it all comes with scaling anything over time. As you gain confidence and experience, you're able to tolerate not just the good days, but as well as the bad days. And it's not that it's any easier to, tolerate red days. You just get a little bit more comfortable being scared.
And it's important to just come learn and not just jump into doing it.
Exactly. To have a set list of best practices that you follow. So one of the things that I quickly wanted to at least talk about, and it's one thing that I want to share with Tanner, is the reason that I'm making this video right now is I'm sure a lot of you guys have seen if you guys follow the market. Markets have recently pulled on back due to originally, first off, being already at all-time highs. So you guys can see this. This is IXIC. This is a NASDAQ index. This is the day chart, so this looks back for the past year. All I really focus on is, you can see that from where we were a year ago to where we're at right now, we're up. And it's very consistent, even during the pandemic. It sold off. Not only did we recover, but we continued to make higher highs and higher lows. And it wasn't a perfect overall uptrend, but there is these consistent pullbacks that kept happening, as it's good for the stock market to correct itself from time to time, and it allows the market to breathe. We recently experienced a pullback due to this Evergrande news of this company that's nearly $300 billion in debt, and that's what sparked this kind of like downfall and this pullback. Again, pullbacks are not scary. The only people that get scared during pullbacks are those that did not prepare. But people like Tanner and I, we're always prepared, just like you, right? So I wanted to talk about, because the NASDAQ market is so bullish and it recently pulled on back.
Really quick, define bullish.
Okay, so bullish, yeah.
I guarantee there's people, because I only just learned this today.
So bullish pretty much just means that you're increasing in value. So you might hear this a lot where crypto is bullish or something like that. It just means that it is indicating signs of growth. And the NASDAQ, as other major markets, S&P 500 and Dow Jones, tend to be very bullish over a long period of time. On average, they grow about 7 to 9% on average a year, which is great, right? Because direction is super important in companies that you want to invest in. You want to invest your money in companies that are showing signs of growth, therefore are bullish. So because the NASDAQ market is not only bullish, but it recently pulled back, one of my favorite things is I like to buy good deals.
Of course, who doesn't?
Yeah, do you like to overpay?
No, hell no.
Definitely not. And again, the most money, think about it, even during like the real estate crash or the real estate bubble in 2008, when the market pulled on back, that was scary. And it was very unfortunate for those that could not prepare or that didn't have money left over. But for those that saw the deals present themselves, real estate is now even at a higher price or higher level than it was before. Therefore, because we're able to recover and take advantage of those deals at those lower prices, we're able to take advantage of that opportunity and ride back and profit from the recovery. And that's essentially what we're looking to do here. With IXIC, again, a NASDAQ index, which has a big focus on tech companies, you can see that it recently pulled on back and it has potential to make a recovery. But the three stocks that I want to quickly talk about are, the first one is Amazon. I'm sure you guys have heard of Amazon. This is Amazon for the past year. You can see that this is where it was just a couple months ago. But overall, Amazon recently pulled on back. We're trading right around $3,200 a share. Trust me, I get it that it might sound expensive. It doesn't matter what the price per share is. It matters how much percentage return it offers. And based off of where we were before, so you could see this, we can use this little trend line tool on the Webull trading platform from 3,200 to highs of 3,700 that offers about 14% return. And the crazy thing about this is like, okay, well, you guys hear that crypto or a lot of other stocks can gap up more than 14% in a day. We're not talking about just a normal company. We're talking about one of the most valuable companies right now that's publicly traded. Right now, this thing has a market cap of $1.66 trillion. So what that means is if it's already down about 10%, think about that, 10% of 1.66 trillion. That's huge. And you're correct. It's only 10 to 15% that it offers for potential recovery. But this is Amazon, a company that I personally don't see going anywhere.
No.
Right? And because it's recently pulled on back, it presents this deal if it were to recover. But one thing, if I were to ask you, you're going to decide where I invest $100,000.
Right.
Do you think that I should buy $100,000 right now at 3,200?
No.
How would you do it?
I wouldn't buy Amazon.
Okay. One of the things that I want to talk about, and I don't know.
Maybe you would.
Maybe. I mean,
I'm not the pro.
No,
you
all.
Tell me if I was wrong.
No. I mean, there's no right or wrong. It's all just dependent on what it is that you see value in. But one of the biggest mistakes, and I don't know.
Well, actually, maybe I would, because then it would pop back up to 37.
Do you see the previous pattern, the previous support, where it tends to find a support level right around the 3,000, 3,100 to 3,200, and then it tends to recover, right?
Yep.
But what if it doesn't recover and I go in with $100,000? Have you ever bought in a dip on a stock or on a crypto?
Yes.
And it still sells off?
Yes.
Okay, and this is why we always like to talk about the three stages of a reversal. There's the rejection phase, the consolidation phase, and the confirmation stage. A very common mistake that a lot of beginner traders or investors make is during this rejection phase, as something is selling off or dipping, they go all in. So an example is if I, again, am allowing Tanner to decide where to invest $100,000, and if I had no experience, I might just buy the dip with $100,000. But what if Amazon continues to drop? That's going to be a little scary, right? I'm not going to be able to really tolerate that pullback if it continues to sell off. I have no more money left over to buy more of. So one thing that we always talk about with our trading group is instead of buying $100,000 all at once, I can buy a percentage of the $100,000. My intention is to go into Amazon or whatever stock you choose with $100,000. That's my full buying power.
Yeah, but you're not going to just walk up and drop the 100K.
Not until I have confirmation of a reversal, because at the end of the day, we want to put our money behind something. We really want to step on the gas when it's indicating signs of growth. Right. So it's during the rejection stage that I can buy 0 to 10%. During the consolidation stage, when it's establishing a support level, that I can buy 10 to 20%. And when it's actually indicating signs of a reversal, so what this would look like is last time, right, that it sold off, it established a support, I can have 10% here, because if it continues to sell off, I only have 10% of the 100,000. It's $10,000. I have $90,000 more to work with. But once it begins to indicate signs of a recovery and begins to indicate signs of growth, that's when I want to step on the gas, because it proved to me that not only did I see that to be a good deal, now it's actually recovering.
And
so
you putting money into it, more people are thinking that too. So you know even more it's gonna go up?
Well, not so much about that. It's more along the lines of if it's indicating already signs of growth, not only are you still getting it for a good deal, but now the direction is in your favor. So now it's actually making you money. So the more money you fuel that position, the more money you could potentially make. So then once it approaches previous levels, then you can lock in profit. So if we were to go into Amazon, I wanted to write this down or at least talk about it. Right now
So
we're
you
at
buy 10% then.
So I could buy 10%, and if it were to make a recovery, as it breaks above, 3,300 or 3,400, I can add another 10%. And then once it breaks above 3,500, I can add the additional 80%, 70%, and slowly add more to my position. The reason I'm sharing this is, and you guys can share in the comment section, if you've ever purchased a stock or bought the dip, it is such a common mistake that you go all in at once, you have no money left over, and then when it sells off, all you're praying for is for it to recover. And it's one of the worst feelings because it's an emotional roller coaster. And then once it recovers back to previous levels, right? So once it recovers to the previous price that you bought at, because you went through that emotional roller coaster, you tend to just end up selling. So you no longer have to experience or tolerate that. And then it makes a full recovery. And then now you feel like you missed out on it. That's what I'm here to avoid. That same mistake of feeling like you missed out on something or feeling like you were robbed because you put yourself in a very bad position at first. So this was Amazon, right?
What do you call this technique again?
The 3 stages of a reversal?
Yep.
It's just waiting.
Throw it up.
Yeah. How?
Throw it up.
So the next one that I wanted to talk about is Apple.
No,
So
that's a good one though. I would never have known that. That's a really good tip.
It's just talking about like to do something in a tasteful way.
Yeah.
That to not rush into it.
Yeah, it's like buying a car and not test driving some before. You just walk up and purchase the car.
Or asking specific questions, right? That might allow you to manage or mitigate risk.
Yeah.
When it comes down to Apple obviously, again, one of the most valuable companies, $2.43 trillion.
I got Apple.
Yeah?
Yeah.
I haven't.
Because I have like a dude that do I don't do it myself.
Nice. Well,
but I got some Apple stock.
It's a good company and it recently pulled on back, right? So it has pulled on back 10%.
Oh.
Okay, so it pulled on back 10%, but the great thing about this is that you can see that Apple over time tends to find us. This is called a SMA. So it's a simple moving average. It's just an indicator. Indicators are to be used as a reference, never as a sole reason on why to take a trade. But because Apple right now is right around $141, if it were to make a full recovery to previous highs, that's a little bit over 10%. So I can make 10% as Apple simply recovers to where it was just a couple weeks ago.
You'll make 10% of whatever you invest?
Yeah, so that's the goal. I mean, Apple can still continue to sell off, right? But it's the same thing of the position size. So it's not about blindly buying $100,000 right now, but I can buy in right now with $10,000. It breaks above EMA or begins to indicate signs of an uptrend like it has before. This is when I want to step on the gas. When it's indicating signs of growth, that's when I want to go in with $20, $30, $40, $50, $60,000.
So let's say here you put 10K in because you're just like feeling it out. How often are you coming back and checking this?
This is the great thing about setting alerts. So it's the very simple things in life that people tend to overcomplicate. And with the stock market, when it comes down to a position that you intend to hold, do you want to watch it every minute of the day as it's going up or going down?
No. But you're trying to invest 100K before it hits the bottom.
Correct. So what I was trying to say was that it wouldn't be in your best interest to watch it every day. It would be in your best interest to set effective alerts if it breaks below 135. If it breaks below the SMA line, I want to get alerted. So what I do is I right click, I click create alert, and then if it goes below that specific price, my trading platform, it will alert me, right? So it's like when people subscribe to your channel and they want to be alerted that you dropped a new video. They turn on your post notifications. The same thing when it comes down to if it begins to indicate signs of growth. I already have my alert set here. So if it breaks above 146, I'm going to get alerted, and that's when I can follow up with it. It's not that you have to do anything. It's that, okay, I'm going to follow up with it and then come back to my decision of, do I want to buy more now? Do I want to wait? Do I want to reduce my position size? There's never a right or wrong. It's whatever you feel most effective. So this one offers about 10 to 11% if Apple were to make a full recovery. Again, this is the past year of Apple. And you can see that even during one of the worst times, when the pandemic hit in February, March, it sold off, but it only took a couple months for it to recover and then completely annihilate the previous high. It went from $79 all the way up to highs of $137, and then guess what? It became super overbought. It corrected itself and then it recovered. It corrected itself and then it recovered. It corrected itself and then it recovered. Now it's correcting itself. So then now we're waiting for the recovery, right?
For sure. It's going to.
So the last one, I'm not sure if you guys have heard of them. It's called Facebook.
For old people might not know.
Yeah, they own Instagram, but Facebook has been absolutely killing it. This is the past year, and you'll see there's three main things that these past three companies that I've shown you have in common. The biggest thing is they're bullish and the direction is in your favor. When you want to invest in something, you just need to make sure that it is in your best interest to allow that direction to be in your favor. So just over a matter of time, it will make sense that they will continue to indicate signs of growth. Even during, even if you bought at the worst time at 384 and it recently pulled on back, I wouldn't be super scared or super devastated. Yeah, you're down a bit.
But the grand scheme.
But the grand picture is that it's bullish, it's a great quality company, and you need to understand what you're investing in. So we go back to the technicals. Right now we're looking at 345. If it were to make a full recovery to 384, that's 11, nearly 12%. So not bad. You can see on average these companies offer about 9 to 11% for ROI. Market cap right under $1 trillion. So this is 971 billion. Poor Mark Zuckerberg hasn't hit $1 trillion yet, right? Poor guy. So, but it's still a good deal. It tends to hold very well above the SMA line. Patterns tend to repeat themselves. They don't always have to, but it's oversold. So again, if I were to ask you for both Facebook, Apple, and Amazon, what stage out of the three stages is it in? Rejection? Is it consolidating, meaning that it's no longer selling off, but it's not indicating signs of growth? Or is it confirmation? So 1, 2, or 3?
Which do I think?
Yeah, so for Amazon, what stage is it in?
That is, I think, closer to 2.
I would say that it's closer still to 1 because it's still consistently selling off.
The blue line I'm looking at, or am I
not the blue line. I would be looking more at the candles because closer to 2 would be what it did here, where it was selling off and then it began to consolidate. This is the not so pretty picture.
So you want to see or you don't?
Yeah, you want to see where it's no longer selling off or making lower lows because again, you're trying to put money into something, right?
So you got to see more of a little flat line.
So you need to start seeing potential of it establishing a support level where then it's going to recover.
Makes sense.
You don't want to put your money in something or go aggressive into a position where it's still aggressively selling off.
Yeah.
So I would say this is more in the stage 1, and you can comment down below what you think. Apple, what would you say? So Apple's difficult because it could be in the very early stage of stage 2.
I think it's in the early stage of stage 2.
Because you see how it's sold off, but now it's trying to recover.
More like longer.
Well, this is because this happened over a period of time, right? So each candle represents 4 hours this represents 1 day.
Okay.
But looking back, you can see that sometimes it does take a week or 2 weeks for it to establish a support level, and then it begins to indicate signs of recovery.
No, I actually think it's still in 1. I feel like it's got to dip more, no?
Yeah, it's still selling up. It's still trading below EMA. It's still making lower highs and lower lows. So it's in between 1 or 2. Mm-hmm. And the last one is Facebook. Facebook, what would you say?
I feel like that's still like beginning 2 or end of 1.
Yep. I would say it's in between because it can still sell off, right? It can still make new lows. The previous lows is right at 337. Mm-hmm. But it's indicating signs of a potential uptrend where if it continues to consolidate, then that could be stage 2.
So these would all be ones you'd put like 10K in.
Yeah.
If you were going 100.
So I wanted to provide a little plot twist because I told Tanner I was going to let him decide a stock to invest $100,000 into. Or if I were to say, I have $100,000 to work with, would you want to just focus on one stock, or would you want to put a certain dollar amount into different stocks? Yeah.
Each of the 3?
Yeah.
Ooh. I just feel like Amazon's well, I guess Amazon could still bounce back, but it's not as big of a jump as the other ones, no?
They all offer about the same margin for ROI. They all offer about anywhere from 9 to 11%. But even at 9 to 11% in a perfect world, my goal isn't realistically, right? Because if I'm averaging up into something.
When are you going to trade this? Like, when are you trying to make the profit from it? Like, how, you know what I mean?
Oh, over a period. I'm going to buy today. I'm going to buy before this video is uploaded. Like, this video will show.
I think we should put a third in each, to be honest.
A third in each. So you want to not go with 10%, but 30%.
Oh, wait. So then we would do a portion of the money today.
You're correct. So the 3 stages of a reversal, right? So I want to go in with about 10% now, right? But I will go in, if you want to go into Facebook, Apple, and Amazon, I'll buy $10,000 of each one of them today. I'll set an alert on where you think then I should buy an additional $10,000, and then I'll have a final $10,000. So on average, each one will have about $30,000.
I think that's smart, yeah, because they'll all bounce back above where they are now. So yeah, I think 10,000 in each one now, because we're not going all deep yet.
No, we're not going deep yet now.
So yeah, we'll do that, and then we'll come up with that. What you just said. Exactly what you just said.
All right. So you guys can comment down below what you guys think.
You think this is a bad idea?
No, I mean I like all 3 companies, which is why we're talking about them. I view them to be all 3 blue chip companies, very bullish, very consistent, and I view them to be very cheap. I wouldn't mind holding them for weeks or months.
Yeah, that's what I mean. I think it's gonna work. I would just like to see which one you make the more money from.
Yeah, they all offer around that 9 to 11%, and how you average up.
We can make a bet of which one will make the most money, and then the loser.
I think it will be Facebook. I would say Facebook or Apple. The only reason that I think that Amazon can make a recovery, but I think it could exceed previous highs, is because we're entering the holidays. Yeah. But this won't be released really till Q1 of 2022. So I think that Amazon is going to have its biggest Q4 for online shopping, and then in Q1 of next year, they're going to release that data, and that will cause Amazon to do well. But
so you want to hold that?
I think Facebook is going to do well sooner because advertisers begin increasing their marketing now leading up to the holidays, where they will see a quicker return.
And Facebook is the platform that
to
people
market
would all promote.
Correct.
So they would probably.
But then Apple is Apple.
Apple makes
and it's more valuable than both of them. So
I think all 3 are a good move.
Okay, so you guys should actually see it by the time that this video uploads. I would have bought in $10,000 of each position. You guys can comment down below. Do you think that he made the right choice putting $10,000 or 10% into each one of them? Or which one out of the 3 would have you selected if given the chance?
Let us know. Let us know, man. It's my first time.
But Tanner already has Apple, right? So maybe
I already got Apple.
We should have gone all in on Apple.
We could still.
No, it's a done deal.
It's a done deal. We did 1/3.
I'm happy with it. So I really do appreciate you guys' time. I hope that you guys enjoyed this video. But again, the whole purpose of this video was kind of just to provide an entertaining way of showcasing why it's so important to watch your position size. It's great when a trade or an investment goes according to plan, but it sucks when it doesn't. And it's always the planning before the trade or the investment that really makes the difference. And position size has a lot to do with it. So if you guys want to join our free Facebook group, we have over 300,000 members. It's absolutely for free, and it's the first link in the description. Make sure to check out Tanner if you guys haven't done so already on YouTube and Instagram, and those links will be down below. But like always, let's make sure that we end the year on a green note.
And don't be lazy, man. Don't be lazy. Go click the link. Go join the Facebook. I know y'all ain't got nothing to do. You're sitting here on your iPhone, watching this YouTube video. Get off your and go learn something.